Hi, my name is Alex Carlucci with Gustan Cho Associates. Today I'm going to talk to you about the no documentation loan. This is truly a no documentation loan. There's no requirement to have your business open for 2 years like the bank statement loan. There's 1 month bank statement, driver's license, and in the 1 month bank statements you need to show that you have reserves. So I'm going to get to the reserves in a little bit. Now, when it comes to the no doc loan, you need around a 640 minimum to do these programs. If you don't have a 640, you're not eligible. But when you have a 640, your loan to value is less. What loan to value means is that you have to put a larger down payment, or you can only borrow up to a certain percentage of the value. So for an 800 credit score, you could do 80% rate and term refinance, or you could do a 75% cash out. So if you got a 660 credit score, you can only go to 75% rate and term and 65% cash out. Now, when it comes to the reserves, if you're doing cash out, the reserves are mortgage payments that you have in the bank. So let's say the mortgage payment is $3,000 a month. They're going to want 18 to 24 months reserves. That's roughly $40,000, $50,000 and up to $70,000 if it's the 24 months. So that they're going back and forth and changing these reserve requirements and the LTVs, loan to values, every other week. So it's hard to keep track of it. But so reserves are money that you have the mortgage payments for your current, the mortgage is what it's going to be, that you have that in the bank after you close. And when it comes to cash out, the cash out of your bank can count towards reserves. Now, let's say you're buying a house and you're doing 20% down, an 800 credit score, you can go to 80%, so 20% down, and the 12 months reserve requirement. So let's say the mortgage payment is $3,000, that's $36,000 reserves. Let's say the purchase price is $300,000, 20% 60. So you got 36 plus the 60, that's $96,000. Now, on a purchase, those reserves has to be your money. That $36,000 has to be your money, clean in the bank account. And it's not considered cash out because it's a purchase, so that has to be your money. The 20% down or the $60,000 can be gift funds. So you really don't have to have that $96,000 as long as you got a family member that can gift you $60,000 for the down payment, but you have to have the $36,000 for reserves. Now, if you're doing a cash out refinance, you have an 800 credit score, you go to 75% loan to value. As long as the cash out meets that reserve requirement of 36,000, let's say that's the same formula, and that you're getting cash out and it's more than 36,000, so that would count as your reserves, as long as you're not using that to pay off debts right at the closing, which I wouldn't recommend you structure it that way anyway, but because there's no need to with the no doc loan. So as long as you're getting $36,000 cash out, you got the reserve requirement, there's no down payment required on a cash out refinance, go to 75% LTV, so you have the 12 months reserves, you're golden. Now remember, on a purchase, those reserves have to be in your bank. All they ask for is 1 month bank statement to verify those reserves. And if you're doing a refinance, we'll need a mortgage statement, insurance deck page, 1 month bank statement, a driver's license. It's real easy to start. That's all you do. So these no doc loans, they come with a little bit higher rate, but all rates are really high right now. I mean, the rates right now for regular loans are in the mid 7s, and for this no doc loans, it's in the low 9s. So it's not that bad for a no documentation loan. I'm doing a lot of these, our company's doing a lot of them. It's helping people that just don't fit that right program. They want decent credit. They don't want anything checkerboard on your credit, so you can't have a bunch of large collections, stuff like that. They might make you pay it off. It's a refinance. They might not do it if it's a purchase. So try to have kind of clean credit. Make sure you got some money in the bank if you're buying a house for reserves, and make sure you can line up that 20% down if you got really good credit. Now, if you got a 660 credit, you're probably going to look at a 30% down. If you got a 680 credit, 25% down. You got a 740 credit, 760 credit, 20% down on a purchase. So keep that in mind. The lower your credit, the more down payment you're going to need. And also, the lower your credit, the more reserves you need. 18 months reserves, or even 24 sometimes. I've seen them go back and forth on that. Now, if this is all confusing to you, that's okay. You can call me. Just remember, if you got decent credit, you want to buy a house with no documentation, and you got the reserves and the down payment or access to the down payment, give us a call. If you want to do a cash out refinance and you need to get the cash out, you don't mind the higher rate, then you're golden. This is for owner occupied, so there's no prepayment penalty on these. So it's against the law for a prepayment penalty. So if for some reason in 6 months or a year from now you can show your income or something changed your life, you can refinance out of this, no problem. So keep that in mind. So we specialize in these no-doc loans. Please give us a call. Cash out or purchase, no documentation loans. My phone number is 630-915-7550. Please give me a call. Please like and subscribe. It helps us help you, and thank you very much.